Hi everyone, Stuart here again. Welcome to theproctrade.com. This is our daily video of update of market and major market moving events. This morning we've had some very benign data out of Europe. Inflation, unemployment here, as you can see, ticking up 0.1% to 6.3%. A bit stickier in Italy and Spanish unemployment being a bit better than expected. Overall, unemployment ticking up by 0.1%. Nothing to get too over excited about, but it's still pretty hefty at 6%, 6 point plus percent, but a lot better than it has been in the past. Retail sales in Australia missed expectations this morning, and building approvals were also worse than expected. But the Aussie's doing okay at the moment. We are long at the Aussie dollar still. From earlier in the week. We'll update those later on. The main event of the day is the private payrolls. The ADP Corporation non-farm payroll employment always comes out on the Wednesday of the first week of the new month, typically 2 days before the non-farm payroll comes out on the Friday, again, typically on the first Friday of the new month. A negative 33,000. So what does that mean? It means jobs actually declined. 33,000 wasn't a new employment, it has actually gone down. Last month's was also revised lower to 29,000 from 37,000, and the expectation this month for private payrolls from the ADP was around about 100,000. So it's a significant variance. We've got 130,000 variant. That will might start to spook some people. It might not spook others due to the there's lots of arguments that the impact of lack of immigration and the increase in deportations of migrants in the United States or undocumented, or people that basically the new administration don't like or don't believe should be in the United Kingdom, in the United States, is obviously impacting the unemployment rate. So the unemployment rate could go up and the jobs numbers be quite minimal, perhaps 100,000 from, or less than that, from non-farm payrolls on Friday, but still not have a detrimental impact on the economy. So just sort of a balancing out of as the surge in immigration that we saw under the previous administration has been dissipated. That's what the current administration would say. So overall, the US economy still continues to do okay, but this is quite a significant trend here. You can see as far as those guys that actually look at the hard data, the trend is diminishing, and we've had a negative reading. This is actually last month, isn't it? Here on the Forex Factory calendar. It's not updated. Is that today? No, it's June's number, not July's number. So if I just try and refresh that, it might actually show that there. Perhaps it hasn't. It's just these jolts, which is better than an example. There we are, the 33. Yeah, we have got a negative. It has actually shown a negative in it. Just zoom that in. There we are. Zoom that down there. Bring that out to the coming month. You can see we've turned. You can see we've turned negative. I'll get rid of that one. There we are. So it's negative. The first time we've been negative since February 2022. Obviously, we bounced back. That was a bit of an outlier. So is this an outlier? But you could argue this is much more of a continuing trend, isn't it? You can see here since the new year, we've been going down here for private payrolls. That was a bit of an outlier because it was corrected straight away. So that obviously is going to have a bit of a shock on the market. We might have a bit of a move. And let's just flick forward to tomorrow. I keep saying Friday, don't I? It's normally Friday. It's tomorrow. Non-farm payrolls around about 120,000 is consensus here on Forex Factory. Bloomberg this morning was saying there a survey is looking around about 100,000. I'll just bring out some key bank data. I saw some key Wall Street banks this morning. We're talking about Citi are seeing about 85,000 with a 4.4% increase in unemployment. That's quite a negative reading. Deutsche Bank around about 100,000 with a 4.3 for unemployment. The Bloomberg terminal the Bloomberg consensus is around about 110,000. So I say, but some are talking about even a 75,000. It can't be ruled out, and even that might not be too upsetting. Elite, good afternoon. I did not know what is coming. We're just Elite, my friend. We're just talking about our Forex success blueprint. We're talking about the markets and what's gone on with the main news. That's the main news of the day. This ADP number that will have had a direct impact on. Where's it gone? Here it is. Will have a direct impact on the dollar. Let's have a look at. That's the UK market we had open, but let's have a look at what else is going on. So if we got the euro dollar 117.80. We look at the hourly chart this morning. It's been drifting lower, and the dollar is immediately weakened on that data. We've got the 5-minute chart. You can see how we've instantly reacted to the data. I'll just set that up for 5 minutes. There we are. Data came out at quarter past. We are now 22 minutes past. So the first 5-minute candle is completed. If you're looking to trade this and you've got a standard account where you can't trade the news, it's only a 2-minute window. So if we go down to the 2-minute time frame, the immediate reaction was up here after a minute, and you could have got in here, and this is the trend has been broken. This 2-minute downtrend we've had since lunchtime, since 12 o'clock, it's been broken immediately on the main news, and that is rallying higher. So you could have even bought there at 117.75, and we're trading at 117.84 at the moment. So we're up 8 or 9 pips in the last couple of minutes. So that's a weaker dollar. The trend on the dollar is it hasn't changed at all. The pressure continues to ramp on the dollar. Huge, not huge, but the bickering or the name calling from President Trump to Jay Powell continued yesterday. He was caught on camera. Not that he wasn't ashamed. He called him a moron yesterday. The President of the United States calling his head of the Federal Reserve a moron. What a guy, eh? Powell did actually take the bait somewhat over in Portugal at Sintra, talking about. He didn't actually say this, but basically he was saying, in a nutshell, if we didn't have the uncertainty of the tariffs, we probably would have cut rates before now. He's not ruling not cutting rates out in July, but he's also not saying he will, as the president wants, put political pressure. He talked about a 3% cut. He's saying rates are 3% too high. It was a 2 and a bit percent just last week from the president. But anyway, so euro stronger against a weaker dollar, and that's probably the case across the piece. Oh, look at that. That stop loss got taken out. I've just realized that was our stop loss we'd raised from yesterday. Ironically, it's taken us out on the day we got our stop loss a wee bit too close. So we had a lot of open trades for the dollar. Or was it already been taken? I think it was half a position. Yes. So we were 117.59. Yeah, there we are. We raised this stop loss yesterday, so that's closed out an entry. Let's just show you this now. I've got this open. Got the 4 hours. You can see where we got in. We got in all the way down here at 116.09, and we got through target 1 quite quickly here. The day after we took our trade on, we took the trade on the close of business round about. I think it was 8 o'clock. We got in here on the 24th, 25th. We got to T1 target 1 at 117. What was it? 116. Yeah, it's shy 117. And our stop loss has been trailed up yesterday. We brought it right up tight here against the 4-hour 20 period moving average, and we've just been spiked out now. But this is, that's strong data. So struggling at 118 at the moment as we've rallied in this new month, but still, it's highs we haven't seen since September 2021. So dollar remains weak. Our final half position has been closed out for a healthy profit. I'll update all the open trades later on today, as I do normally. But euro is bid on that on that surprise weakness in the ADP number, the private payrolls number, as we can see here. We just look at it on our calendar as well here. The Wednesday, isn't it? It hasn't actually updated it. It doesn't automatically update the investing.com calendar. That's one of its big drawbacks, whereas the Forex Factory one does, and it's some Forex Factory one I've used for years and years, and it also defaults for lots of countries. With all due respect, aren't market moving, and I'm not really interested in it, but it does it. You have to filter out. Actually, having said that, this Challenger job cuts, this was quite a significant number earlier on today. It's the biggest first half change for Challenger job cuts since 2020, since the first half of 2020. So obviously 2020 was the pandemic, the COVID crisis, so that could start to raise some eyebrows somewhere. So it's a big change for in cuts, minus 1.6%. So watch that one as well as we go forward. So there we go, minus 33,000, as we saw on the Forex Factory calendar here, or the graph. You can see it much more graphically. You can see that trend very much in tow. So let's, if we just skip forward to tomorrow and do the same thing for the headline ADP, sorry, the headline NFP, non-farm payroll, you can see a similar pattern. If I just move that, no, I'll move that there, just take that spike there, which makes it a bit more sensible. There we are. You can see that. So you can see it's less exaggerated here with that out. It's less exaggerated here with NFP, but we are, you know, better than expected, and this is what the administration has been saying. So March, April, May, June have all been better than expected. These are the expectations, the forecast of the brown ones. There we are, and that's basically what the president, quite understandably, has been pushing, and his Mr. Lutnick and Mr. Besant, his two key secretaries of state for trade and treasury in particular, have been pushing. So see what tomorrow brings. Obviously, the correlation between the ADP number and the NFP number has broken down over the years, but this still could be a question mark. Could be an outlier as well. Possibly, probably not, but we'll see. But it mightn't be as dramatic or as significant as many are expecting, simply because the slack or the surplus in the jobs market has been taken up. So there is certainly signs of cooling in the US economy. Those people that are trying to get a job, it looks like it's quite difficult. But if you're actually in a job, as we've seen with the earnings numbers as well, and we'll talk more about this tomorrow. The earnings and the actually, let's go back to our calendar. Let's go back to tomorrow. Scroll forward to tomorrow. The earnings numbers. The earnings numbers are relatively strong. They've held up around about that 4% level, and monthly earnings ticking up 0.3, 0.4% per month. So if you actually got a job, you're okay. It's just trying to get a new job, so that it's been squeezed out. So people aren't necessarily sort of getting rid of people. They're paying people that have got jobs a little bit more to keep them. But then if you're trying to find a new one, there isn't the new openings. That seems to be what's happening. That seems to be a description of the US economy. So as I say, even if it's under 100,000 tomorrow, it might not be of a scare to the market. Obviously, it's a hugely psychological number, 100,000. It would be a miss if it came in, as we've just seen for the first time in 3 or 4 months, that the headline is coming under expectation. But again, the detail, like things like the participation rate, this wider U6 measure of unemployment, has started to tick back up as well. It's still under 8%, but it's been going back up over the last couple of months. So watch this one. If the main headline unemployment number, if this is 4.4 or 4.5, that would be a bit freaky. Anything at 4.2 like we had last month, or 4.1, even less, that would be really good the chance of a cut in July much more than we sit at the moment. As we saw yesterday, you can see if we go to the FedWatch tool here at CME Group. It's a free tool anybody can use, guys. It's not something I party to or anything. This has come down from yesterday. It was about a 78% chance of no change or at the end of July. So it's ticked up about a few percent overnight. If we just scroll down a day ago, everywhere. So yesterday it was in fact, it's got up nearly 5%, hasn't it? So it was 20% chance. Now it's a 25.3% chance, 21% chance, 25% chance now. So it's moved relatively significantly on the basis of presumably what Mr. Trump said and the those stronger JOLTS numbers tomorrow, yesterday, and the ADP. That may have reacted to the ADP. It's quite sensitive, this one. It actually does update quite quickly, but whether it's actually responded to the ADP data or not, I'm not sure. It might be a bit too close. It's there we are, 74.7, so it's tweaked a little bit. But as you can see, by September, which is when everybody is expecting perhaps the first move to come after the summer, the data's in. Labor Day on the 1st of September is out of the way. It's 2 weeks after that. So we've got more CPI data. We've got more CPE data for the Fed to chew on more, and obviously non-farm payrolls. There's like a 70-odd% chance that we will have gone the other way. We will have cut by September by at least 25 basis points. There's still quite a cohort of analysts and commentators that there will be no cuts at all this year. But the consensus still remains one will probably end up the consensus, because we've got this split on the Fed where there's a cohort saying none, there's a cohort saying two, but only just. I mean, the way they analyze the data, or the way they crunch the data, it was only just it kept to two for those hawks. So it's coming back down. So we might end up somewhere in between, which is this one cut in September, one and they're done potentially. But I mean, there's a lot of data to come still then. There's a lot of time and a lot of water under the bridge between now and the 17th of September. It's still to come. And obviously the great big beautiful bill is the first of those that looks like it's going to get passed, and it might even get passed by this deadline of the 4th of July, but that's looking a bit sticky now. Trade deals were supposed to be the 9th of July. It looks like they're getting extended out to the Labor Day, the 1st of September. But, you know, Lutnick said earlier in the week, there's 10, 12 countries close to agreeing. But that's quite a significant change for ADP. So ADP is coming negative. It's been a decline in jobs, not an increase in jobs, of 33,000. It was expected to be a growth of nearly 100,000. It's a big variance, as I said earlier. And consequently, we've seen a weaker dollar on the back of that. If we go back to the 5-minute time frame, we see the dollar weakened. Let's give up some of those rallies as we attempted 1790 and the hugely psychological 118 area. So we come down a wee bit in the last 10 minutes, but still it's a weaker dollar on that. So elsewhere, we only took one new trade last night, and that was the gold trade, which we got in. Let's go back to the hourly chart, the 4-hour chart. We got in last night here at I can't remember the price we were filled. I think it's 34, wasn't it? 33, 34. We were filled last night to go long on gold. Our target was just not that far away. We just missed it earlier. It looks like we've gone through it while we've been talking on the weaknesses on that data. So 33.47 was our first target. Our stop loss is all the way down here. So I'll drag that stop loss up here now, just shy of this. Is a 4-hour time frame. Remember, we entered on the daily time frame, so I'm bringing up my stop loss, not quite to entry at the moment because we just started, but I'll bring it up to the just shy of the 20, the red line here, which is the 20 period moving average for the 4-hour time frame. So I've moved my stop loss up from wherever it was last night to a new area here, and it's come to 3323.78. So I'll just make a note of that. 33. 33.2378 is our new stop loss on gold. So gold's hit its first target today. Elsewhere, I mean, if you want to run that, and I'll happily update. I'll just update the ones that have closed last time I looked. Pound Aussie was the one that was we were in that has been stopped out this morning. Was it Pound Aussie or Pound Kiwi? I can't remember. We're certainly in both of them. So Pound Kiwi, I think, is still that's heading off to target. That's not been stopped out. But Pound Aussie, what's the Pound Aussie? Pound Aussie, there it is. Pound Aussie got stopped out overnight. I forgot to. I wanted to check this in the last hour or so. I missed it here on this platform because I didn't have much of my trading platform open. But that's there we go. That's one of those things, isn't it? Look at what happened. We got short here. It says 60, wasn't it 1600? Anyway, that's the price we got in at. It wasn't at 6 o'clock last night. We got in short here at 208.61 is when we got, 208.64 is when we got filled. I pulled the stop loss. That's what I did. I'd pulled the stop loss down, didn't I, last night? Yeah, as I got in. Yeah. So anyway, it's been taken out. Such is trading. But since then, and that's always what happens, isn't it? We've actually gone off to hit the targets. So that is a classic example, guys. I mean, again, don't beat yourself up, because if you did this, if you beat yourself up every time this happened, you'd end up not trading and end up going wild. The stop loss was originally all up here somewhere when we first opened the position. Let's have a look. Bring it up here. I can't remember what that was. It was trading strategies. What was it? Stop loss was 209.49. So it was way up here somewhere. 209.49. We were up here somewhere. So if it left the stop loss where it was, we'd have still been in the trade overnight, and we would have hit target just now. However, I didn't. Before I went to bed last night, I dragged the stop loss down, because it's the way I trade, because basically on the back of this big candle yesterday afternoon, and then this weak candle there, and I think I must have missed this one coming back up, but I was still fairly comfortable with that. It was above the 50 period, the green line, the 50 period 4-hour moving average. The 20 was moving down, looking like it was going to cross, so it looked like it was going to go down. I just didn't give it enough breathing room, and that's what happens. Just got about taken out, and there we go, plummeting through target. So don't beat yourself up about it. The analysis was just about right. Perhaps I was a bit too aggressive when I was pulling that stop loss down last night, but it was late, and I was a touch tired, a touch weary of the day. But anyway, it's just one trade. You can't focus too much on one single trade. So you got to take the whole thing as a bundle. And say we just hit target on gold, we hit target on Kiwi, the euros being stopped out. That's been running really nicely. What else was still open? I think pound was closed, wasn't it? The FTSE was doing okay, but I'll update them all as we go through the day. Actually, euro has hit target. It was still open, the euro. Kiwi is on the majors. I'll go back to the majors. Aussie. Interesting. That's continued to. Actually, is it Aussie bounced in that? No, it's interesting. It went up and it's gone back down again. So that's been stopped out now. Again, that was dragged up. So that's another one. So euros closed. The long Aussie dollar's been closed. Its first target was here. I don't think it actually hit that, did it? No. So the whole position has been closed in profit, but we never quite got to target one. As you can see here, the stop loss was originally all the way down here. I think it was just under 65. But again, as I dragged that up as we were moving on, as it was moving, it's again got a bit too close, a bit too aggressive this morning. But that one's now closed. The other one was the Kiwi, and that one has also been closed, but that one had already hit target one. So it hit. You can see here, it hit target one. Target one is the this top line here. So the Kiwi had hit target one, and again, entry was down here, and I'd pulled the stop loss up way above the entry, and that has also reversed this morning. And that was 9 o'clock this morning. That reversed and stopped out. So I've got quite a lot of updating to do. So there's lots of pips in the bag. So that's a winner, a double winner. The Aussie is a double winner. That pound, what do we say? The pound Oz was a loser. Kiwi, pound Kiwi is still open. Let's go through all of them actually. Well, I've started now. Euro's been closed out as well, which we said, didn't we? 117.50. Let's come back to, but there's our entry all the way down there, just over 116. So 100 odd pips on that one. Euro Oz is another one that's still open. I don't know what's happened with that one. Euro AUD. Guys, if there's anything, any other asset you want to have a look at, let me know, and we'll have a look at that. We'll go through the others in a minute, but these are my live positions. Those of you that follow me or don't follow me, so that's done nothing, and it's closer to its target than it has been for a while. But there's obviously a bit of a resistance through. I might close that out actually, because look at this: once, twice, 3, 4, 5 times. We can't get above where we are, and that is 179.65 is where we are now. So yeah, my target might have been a wee bit too far, and I might close it out. But you know, don't hold me to that. It's I'll probably forget. So that's in the money. Kiwi CAD, we done that one. So look, Kiwi CAD, New Zealand CAD. Kiwi CAD. That one's been. Oh, look at that again. Oh my word! Look at this morning. 5 o'clock. We were in there. Did that get no? Oh, I haven't checked my trading platform. My trading platform might have been triggered, but it doesn't look like it. Remember, we're looking to get the overall price. And the price you're seeing here on this, it will be the mid price. So it's probably not been taken out, but it's certainly come within a smidge, within like 0.1 of a pip by the looks of things. But look what's happened this morning. We turned around aggressively. Kiwi's weakened. CAD's got a lot better, and bang through the. Is that another one that's? I can't remember if that's a full trade or. Stop loss to. I must have dragged that up, and it's not hit target. Or is it hit target? No, it's not hit target, but I pulled the stop loss up above entry. You can see there, that's the so I've made a half a pip, I think, on that, having nearly made 30 or 40 pips or 50 pips, whatever it is. So, but that one's out as well. So lots of action today. Lots of our open trades closed now. So Kiwi CAD's closed. Euro we looked at. Pound Oz, Pound Kiwi we've looked at, and the only other open one we haven't looked at yet was the FTSE, which was open, but I think that was on when we came on 8747. So that was in the money again this morning, and it's turned around quite aggressively. This current candle, I moved the stop loss on there, so we're out of the money now from being in the money. From when we are more or less in the money, we're out of the money, not quite close. Oh, there we go. There's another one in reverse, within pips of getting stopped out here. Was it yesterday? Yesterday morning at 11. We rallied. That was the one I wasn't sure about where the target should be, wasn't it? The FTSE. I should have taken it while I had it, but here, there we go. It's reversed, and that sometimes, remember, guys, that is we talked about fear and greed yesterday on Monday at our webinar, and these are the sort of things that really stick and get to you. You know, that's I've had a lucky one there. It came within pips. I've had 2 unlucky ones that have just been stopped out, and then there's this one where it was positive yesterday. Went to bed positive. Looked at it first thing this morning, and it was all positive, and then it's turned around on the data. Here, this next 4-hour candle, all the way to come down to the hourly candle. It was all, it was all okay here at the open, down at the open here on the cash market, but then a big candle down here on this US data. The stocks have slumped. Obviously, big political ructions in the UK at the moment over the welfare bill. The government having to do a huge U-turn and to plate some of their backbenchers, but that looks like, at the moment, that's momentum to get stopped out. I got away with it once, but let's just wait and see on that one as well. But that's a big positive or big negative candle compared to what else is going on. So I might just cut my losses short and close that one out now at 17.45 is probably where I get filled. So I might just take that on the chin and a 15-point loss on the FTSE 100. You heard it here first, my friends. That's the final trade. And as I say, gold has hit its first target. We'll be dragging up the stop loss on that one as well. Hit target, and it's continuing to move to the upside. So I might pull the stop loss up to just shy of the entry on that one. There we are. I mean, this is the 4-hour time, so it's just so we've made half our. Actually, I'll do that later when I remember what the entry was. But sorry, stop loss. I'll just pull that up to entry. So assume stop loss at entry for the gold trade. I might actually pull that down a wee bit. It's perhaps a bit too aggressive. But anyway, T1 on the gold trade has hit target, and we're off and running. Crypto this morning, Bitcoin is currently trading at back over the out of the 105, 106 range at 107, 2025. So we're having a good morning Bitcoin wise this morning. It's 2 strong 4-hour candles in the Asian session, and we're back over 107. But if we go up to the daily time frame, we see we just let's go this. Sorry. We're finding that support again as we did yesterday at this big level. We talked about this yesterday, didn't we, on our webinar? The 20-day and the 50-day coalescing here at this level. So for the bulls, we're back up again, back over the 107. But we need to break above this range, don't we? For the last, what's that? 1, 2, 3, 4, 5, 6, 7, 8 days. We can't get above this little area here, which sits at around about just shy of the 108,000. So 107,700 is the area we'd like to see a nice breakthrough on the daily candle, and then you can see the next level up was these 2 tweezer top pairs type candles we had at 108,700 as well. So still consolidating, but down day yesterday. Bought back most of it so far today, but still not complete. If we finish like this is an so it might suggest more weakness. It's an engulfing candle for Tuesday and Wednesday. But again, see where we go. There's a lot of fresh air here, and there's a lot of fresh air above this. So sideways for now. For Bitcoin. Over on the energies market, the oil market continues through this 65, 66 range. Positive day today on the back of the private payrolls, private inventories yesterday. So we were up to start the new month Tuesday. We're up again today, but again, you can see the moving averages, the fib levels we talked about many times before in place. So this yellow line here sits at 67. The 20-day moving average sits just above that, 67.35. We got a key fib level there at just shy of the $70, 38.2. The 50 fib level, this green line, sits where we are now at the $67 level. So there's all sorts of key, both technical and psychological levels in play on the oil market at the moment, and we're sideways, a bit like the Bitcoin market for the last 8, or certainly last 6 days into our 7th day sideways in the oil market, 67, 66, 75 at the moment for US oil. I think I got a trigger last night, which I didn't trade on the oil to go long UK oil last night, but I don't share that here with you. So I think I might be, one of my assistants might be long UK oil from last night. So there we are. Indexes, we've had this record second quarter, NASDAQ up 17 and a bit percent for Q2. Yesterday, we closed down on the day. Let's just go through them all again. The Dow was, sorry, the other two were down. The Dow was actually up, had a strong day yesterday, ironically. To the upside, so we're heading for the 45, or eyeing the 45,000 level, and these all-time highs up here at 45,000. So a strong run up in the Dow. The tech stocks much more volatile. Tech was down yesterday, and we're down again today. Nasdaq 100 still nicely over the 22,000 level, but running out of steam. up here at 22,700 on Friday. Sorry, on Monday, down yesterday and down a tad again today. And the more important, S&P 500 back under the hugely all-time high, significant 6,200. You'd expect a bit of a stall at that level, but we are still, comfortably broken out of the 6,000 level and over 6,100, and new all-time highs pushed this week for the S&P 500. Finishing flat yesterday, and futures so far are down today. I think it's down day just about. There we are. It's just rolling over now, actually. The S&P at the moment, it's still half an hour before the cash markets open there. So to summarize today's action, the ADP is coming negative for the first time. I didn't actually check what it was last negative. Well, we did say, didn't we, earlier? It was September. February 2022. So the first time, and that was certainly an outlier, as you can see there. It's very much a odd one out. When I say outlier, it was February 2022, January 2021. So very much an outlier. Is this one perhaps likelihood of it being an outlier is perhaps less so? I mean, it's just a tick, but it's still a loss of 33,000 jobs in the private sector, which is what Trump was wanting to boost up. Remember, it doesn't take any government jobs, the ADP. Interesting, because that was the big mantra at the beginning of the year when Mr. Musk and Mr. Trump were best buddies. All this money the Doge was going to save the US taxpayer come to not naught, but to a lot less than they were targeted, and they were trumpeting, and their rhetoric was spinning. This could just end up being an outlier. Again, time will tell. As I say, the correlation to non-farm payroll, which is much more important from decision makers and market makers as well. Tomorrow, not Friday, remember, it's tomorrow. So we'll be with you this time tomorrow for that. Could be absolutely key. Also, remember, tomorrow we've got the weekly claims as well. It's very much jobs focused week this week, and setting the course for the summer really here at the beginning of July as we run into and kick off the second quarter. So guys, if there's no more comments about anything or any assets you want to have a look at, in particular anything you want to trade, or either on a short-term basis, longer-term basis, let me know. Let's just go back to the euros, if the dollars come back at all. Sorry, euro on the major, so the euro 117.60. So we're back a bit. We're giving up a bit of what we gained on the data. So we spiked to 117.90. Let's go back to the 5-minute chart. 5-minute chart. So we've given up most of what we gained, and we're back to stop loss here, 117.60. So it's sort of been shrugged off to an extent, but as you can see, the dollar's better today. Euro's down against the dollar today, but the uptrend is still very, very much in play. If we even if we stay at the 4-hour time frame, you see there's a bit of a rolling top there that's suggesting some weakness, but the 20-period moving average is still holding currently right where our stop loss was, where we've been taken out on our uptrend, and the 50-period on the 4 hours all the way down there at our initial target at 1670 zone from our entry. We got in at 1609, so some nice pips bagged on the euro over the last couple of days, or last week or so, wasn't it? 24th when we got in, which was last Tuesday, wasn't it? So in a week we bagged some 100 and odd pips, 160 pips on the euro. So there we go. I'll see you all tomorrow for non-farm payroll. Take care. If you've not got an account with us, as I always say, you should do. The ability with a small investment of or a small purchase of a few $100s gets you a huge trading portfolio, equity portfolio. Gives you a huge equity of 50,000. I mean, 50,000 is a huge amount. $354. If you haven't got that, 25,000, still a significant, this sort of packet, sort of size of account you need to trade Forex properly, in my humble opinion. There you go, I said it. And that's why it's probably the most popular. The two-step challenges are most popular because it's a bit more, you do have to go through 2 phases, but the targets are a bit more, a bit easier to get to. Only a 8% profit target on phase 1, and only a 5% on step 2. You can only lose a maximum of 10%, which is, that's what you want to be looking. That's what all successful traders are aiming at. You got leveraged up to 1 to 100. You can't trade the news, but a lot of people get a bit hot under the collar about trading the news. The problem with trading the news instantly is, yes, there's a risk of, you can potentially, if you get the right side, some pips, but for me, it's always been fading the news, a bit like we've just seen now. It was a strong number that came out here on the let's go back to the minute chart. So instant reaction was positive, but then it depends where you've got, and if you bought here, right, a panic of it, you'd have it was only it was only 3 or 4 minutes before it topped out and you were being stopped out. So see where we go, see where we fade. So that's positive. Add, get out here and then go short here as it's gone under the 20, using this exact same strategy on the 1 minute chart. So we would have been short. Our stop loss would have been up here to start off with, and then added short on there as it's gone up and then come back down. Added short there as it's gone through the 50 if you've been really aggressive, and then stopped out as it's gone back through the mid-period moving average there, the green one. So you'd have made some on that. That would have been a bit more difficult. You'd have made some on that as it's gone up. So yeah, it's possible to trade the news, but a much more calm way is to really fade it. So there's the 2 minutes before it. So that's the 16 minutes. So at this point, you could still buy you could then place a trade now 2 minutes after the news has come. Sorry, it's not, it's this one, 17 minutes. Yeah. So that's gone up. That's at its first. So you would have bought it there, run up there, it's come back down, you got out there. That wouldn't have worked out, to be honest. The break of that point there at 13.36. So what was that? 15 plus 6 is 21. So some 21 minutes after the data has come out, the initial rally has been faded, and that's when you've made some good money there, down, out, and then down again. Now you're still short again here, perhaps back down to the low of the day. Is that the low of the day? I think it is that low of the day. Are we going to test that low of the day at 117.47 would be the test, but we'd need to get under, obviously 17.50 would be our next target to the downside, that round number there. So are we going to test that? Looks like that's on its way. So you'd have made more on the way down than you would have done on the way up, just using this simple crossing exponential moving average strategy on a 2 minute time frame, not trading the news. Okay, so don't get too hung up about the fact you can't trade the news. I know a lot of you do, but anyway, it's there for a reason. It can be very volatile, can bite your bum. It's protecting us as well as protecting you. So anyway, $175 gets you $25,000 worth of equity. But if you're new, you've never used this before, it's our first time here. New 25 is a coupon code that's still live, and it saves you $44 or $43.75. Gets that for about $130. Gives you a huge equity to play with. So give it a go. It's a very small investment for a big equity and the potential to make real money, because once you get through these stages, whether it's 1 step or 2 step, your account gets refunded, obviously, and then a week, 2 weeks thereafter, you've made some money. 80% of what you've made on the account is yours. Ask for it to be withdrawn. You get it within a few days of your request, which is always processed on a Friday. So trade the week, and I'll request it certainly by midnight Thursday, and it'll be processed Friday if you get it shortly thereafter by crypto repayment. So come and join us if you're not with us. If you are with us, best of luck. And if there's anything I can do to help, please ask. Please stick it here on the Discord group, and on the Discord trading strategies channel. I put all my end of day trades. Obviously, I can't put all the scalping stuff, it's too much to type all the time, but I'll update these positions because, as we've just seen, some of them have been stopped out. But we're certainly in the money. We're in the money for June. We were in the money for all of the second quarter as well. Here's the data from yesterday. So for June, we were up nearly 300 points altogether. So not a great. Sorry, for a week. The week we were up 300 points. June was 500 points overall for the 4 weeks. We had that big, one of my worst weeks in a long time, 560 loss week 3. But for the whole of the second quarter, that's April, May, June, we were up 3,367.063 points for the second quarter. And I should do the first half as well. We had a good surge. We didn't start till I think it was the 3rd week of January. February I was away for a week as well, but February was positive as well. March was positive. So I'll do the first half as well. But to say, July is up and running. We had those big winners yesterday. We bagged for the Swissy 94 pips and 7 pips. That pound Oz lost us 68 points this morning, but we've got more than got that back on the euro and the other Kiwi trades and the other positions that are open. So anyway, I'm going to leave you in peace. It's 2 o'clock London time. It's 1300 GMT. It's 4 o'clock in Eastern Europe, and where all my colleagues sit. So take care, everyone. We'll see you tomorrow for non-farm payroll. Stay safe, and may the pips be with you as ever. All the best.